So I think that we can start. Hello everyone and a very pleasant afternoon to one and all present. I am Revant, a junior undergraduate at IIT Gandhinagar, and I will be moderating today's webinar organized by Amalthya. Amalthya is IIT Gandhinagar's annual student-run technical summit, and this year marks our 12th edition. And the theme of this year's Amalthya is unifying minds and fostering ingenuity. Webinars are a crucial element of Amartya, and this is the first webinar of our series. I take immense pleasure in introducing our first speaker, Mr. Nilesh Shah. Mr. Nilesh Shah is currently the managing director of Kotak Mahindra Asset Management. He has over 25 years of experience in capital markets and managing funds across equity and fixed income securities. It is a great honor to have him with us. He has kindly agreed to give a talk on Gen Z investments and the Indian economy. Before I hand it over to him, I would request all the participants to keep their questions coming through the Q&A option. We will address them in the end. Now, without any further ado, I will hand it over to him. Over to you, sir.
Thank you, Raven. Very good evening to everyone. There were lots of to and fro on this subject, and I chose Gen Z, which you are, investment, which I am, and economy, which impacts all of us. Let me first talk about economy, then I'll talk about investments, and then you can teach me about Gen Z. In 1947, when India got independence, we were one of the better Asian country, despite decades of looting by Britishers. We were having steel mill, we were having aircraft maintenance facility, we were having shipbuilding, and we had first automobile plant, we had more railway tracks than any other Asian country. And despite having that advantage, we kept on losing out. In 1960, Korea was having same per capita GDP as India, and today they are 10 times bigger than us. In 1980, China was similar size as India in per capita GDP. Today they are 5 times bigger than us. A country like Sri Lanka, which was war-torn, is double than us. A country which we helped create, Bangladesh, is now going to exceed our per capita GDP. Now, it's not that we haven't done anything between 1947 to 2021, but others have done far more. And I believe your generation is a lucky one, as you are going to inherit a far more developing India than what we saw. And this is all possible because we are letting go the constraints which had kept us chained for last 70 years. Let me give you a brief idea about how India is transforming. If you remember, and I don't know whether your generation goes and watches old Hindi movies or not, but I'm sure you would have heard names like Mother India, Roti Kapda or Makan, Kali Charan. In all those movies, the villain was generally black marketeer of food grains. Today, when you see movies, you hear villains as terrorists, politicians, policemen, and so on and so forth. How did this transition happen where a food black marketeer ceased to exist as a villain? Well, we had high inflationary economy where double-digit inflation was considered normal. In 2014, Government of India mandated Reserve Bank of India to target inflation and keep it within 2 to 6% range. Since then, inflation by and large is remaining in that range. Today, some of you would have read headlines that India is facing inflationary pressure. RBI's monetary policy is not containing inflation. But the fact remains that American inflation is higher than India. Their big figure is 6. Our big figure is 4. Our interest rates are higher than America. Now, moment someone tells us that Indian inflation is high, I give them, then what is your opinion on American inflation and American monetary policy? And then they shut their mouth. India is transiting from high inflation to moderate inflation economy. And that is going to change our macro. Prior to 1991, India was always short of FX reserves. The situation was so dire that in 1991, we had to pledge gold to borrow money in foreign currency. Since then, India started accumulating FX reserves. Today, we are the fourth largest holder of FX reserves in the world. Our reserves exceed $640 billion. Rating agencies still give us just above investment grade rating at triple B minus or triple B. But the fact remains that we have more foreign exchange reserve than our foreign exchange debt. And unlike UK, Germany, Japan, US, we are having net surplus FX reserve over FX debt. This transition from low FX reserves to high FX reserves is again giving solid foundation to Indian economy. In the past, Indian government was a fiscal profligacy government. We used to earn 100 rupee and spend 110 rupee and leaving 10 rupee burden on Gen Z generation. In mid 2000, Government of India came out with Fiscal Responsibility and Budget Management Act. It targeted revenue deficit to zero level and fiscal deficit to 3% level. Thanks to pandemic, we are back to original days of spending more money than what we are earning. But we haven't put FRBM in abandonment. It is just kept in abeyance. And next year onwards, we will be back on fiscal prudence. This high fiscal deficit to moderate fiscal deficit is again giving foundation to Indian economy. Many of you will not remember, but when I was Gen Z, for us, Mumbai-Pune journey was an overnight journey. The roads in the Ghats were perennially choked, and some amount of landslide, some amount of accident, and you are stuck there for hours. Today, if you navigate traffic out of Mumbai, you can reach Pune in 1.5 hours. India is transiting from infrastructure deficit to infrastructure availability. Many urban cities in India, including Delhi, Kolkata, Chennai, Bangalore, witnessed power cuts. Today, despite having second largest demand in the world, we are producing enough power. This transition from infrastructure deficit to infrastructure availability again gives great foundation to India. Earlier, if you notice, our infrastructure was physical. Now you have physical and digital infrastructure. 10 years back, if I had to talk to you, I need to be present in your campus. Today, I'm able to do it, even though I'm traveling right now and I'm away from my home as well as office. This digital infrastructure is again giving foundation to India. There was a Colonial Magazine reporter. For 3 years, he was based in India. He couldn't find anything good about India and kept on cribbing about India. Because he wrote so many bad things about India, he was promoted and sent to France. The first tweet he made out of France was, when I wanted to shift money from one bank account in India to another bank account, it took less than a minute. It was instantaneous thanks to IMPS. The damn thing takes 3 days in France. Our digital infrastructure is far more developed than many developed worlds. The luxury which we witnessed during COVID-19, where after vaccination, you were getting vaccination certificate online. In US, in Germany, in France, in UK, they still are going paper way. This physical infrastructure to combination of physical and digital infrastructure is a game changer. More importantly, in US, in Western world, infrastructure, whether it's physical or digital, is mostly owned by private enterprises. They create monopoly, duopoly, oligopoly. In our case, a lot of this infrastructure is owned publicly. For example, credit card payment systems are owned between Master, Visa, and diners. In India, we have RuPay, which is publicly owned. The UPI, Bheem are creating public infrastructure through which payments can be made. This availability of infrastructure, as well as creation of public digital infrastructure, is going to help Indian economy significantly in years to come. Earlier, we had crony capitalism, how iron ore mines, coal mines, telecom spectrum was allotted. All of you can do the Google search and know. Now there is meritocracy, there is transparency. Earlier, for winning road contracts, you had to take shortcuts. Today, it is transparently bidded on an online basis. And if you are L1, you get the construction order in just about half an hour. This journey from crony capitalism to meritocracy, transparency, is again creating foundation for India. Effectively, India is getting transformed because it's moving from high inflation to moderate inflation, low FX reserves to surplus FX reserves, high fiscal deficit to moderate fiscal deficit, infrastructure deficit to infrastructure availability, physical infrastructure to physical and digital infrastructure, and crony capitalism to meritocracy and transparency. This is laying foundation for India's growth in decades to come, which my generation, when we started our career, we didn't have the choice. There are two more important factors which are changing India for good. One is availability of capital. I am a Gujarati, but I'm the black sheep of my family who is working to, who is doing a job or who is working to survive. I'm not a businessman. I couldn't become businessman because my father didn't left me with much money. Today, I have made enough money, but my daughters don't need my money to start their businesses. If they have idea, they can go to private equity, venture capital market and raise capital. Money is available for idea. When we started our career, we had to endure Lalaji culture, Shethji culture. Tomorrow, when you start your career, you are going to be entrepreneur and you will get capital if you have an idea. This transition of Lala culture to entrepreneurship is the biggest benefit of Indian economy. Finally, the big change which is happening in India is that government is changing its stance on public sector undertaking. There was a time in 1947 where government thought public sector ownership, public sector undertaking is future of India. They were called modern temples of India. Unfortunately, public sector undertakings didn't get appropriate freedom. They got capital, they got monopolies, but they didn't get appropriate freedom. Now government is moving to public-private partnership. A case in point is Hindustan Zinc Limited. In 2003, as government company, it was making 100,000 tons of zinc and was loss-making. In 2021, it makes 1.8 million tons of zinc, almost 18 times more in just about 14 years. And it makes profit immensely profitable and contributes 10,000 odd crore to the government. This journey of public sector ownership to public-private partnership is going to unleash potential of India. Air India, IDBI Bank, Container Corporation, Shipping Corporation, Neelachal Ispat, BPCL. When this asset shift from public ownership to public-private partnership, they are going to create tremendous value like Hindustan Zinc Limited. And that's going to change India. I believe over next 30 years, when your generation is going to spend time in India, will witness far bigger growth, far higher growth than what our generation witnessed in last 30 years. This is the most exciting time to be in India, with moderate inflation, high FX reserves, moderate fiscal deficit, transparency and meritocracy, infrastructure availability, digital infrastructure availability, public private partnership, and availability of capital for an idea. This foundation will create such an accelerated growth that we will be one of the best performing economy in the world. Now, next question comes, have we done everything what is needed? Of course not. There are two things which are most required on top of it, what we have already done. The one is rule of law. We have lawyers, we have judges, we have courts, we have tons and tons of laws, but justice is missing. We passed a law called Negotiable Instruments Act. Under that, if a check bounces after certain process, person goes to jail. Unfortunately, today there are 40 lakh cases in which people have gone into litigation, but there's no justice, there's no delivery of justice. This lack of rule of law is not pushing entrepreneurs to invest into our country. Many of you remember that Indian money is going abroad in Swiss bank accounts, in offshore centers of Dubai and Singapore, and so on and so forth. Why will an entrepreneur take his money out or her money out from a developing country like India? It's only because they don't believe in the rule of law. They are afraid that they need to create some diversification. If we can bring rule of law, entrepreneurs will come to invest in India, not only from India, but also from abroad. And clearly, we have to improve delivery of justice significantly. The second thing is related to respect for business. Businessmen needs to be respected. They are the people who create jobs. They are the people who create growth. However, somewhere, unfortunately, we are not giving enough respect to our businessmen. Our businessmen can be harassed by tax inspectors. He can be harassed by numerous rules, regulations. He can be weighed down by the compliance burden. He is willing to take fight in the market against Chinese manufacturers or others. But how does he compete against rules, regulations, compliance burden, or the corruption which is prevalent? Unless until we start respecting businessmen as people who create wealth, who create growth, who create jobs, they are unlikely to be wholeheartedly going into businesses. It's not that all our businessmen are crooks. There are exceptionally good businessmen like Tatas, like Birlas, like Premjis, like Ambanis. If these businesses are respected and their fellows are respected, then I'm sure they will go all out to create jobs and growth. This rule of law and respect for business, if it materializes, I have no doubt in my mind that India will be one of the fastest growing economy. We have done a lot in this respect since 2014, when Narendra Modi government came to power. In 2014, we were 10th largest economy. Today, we have become 6th largest economy. And very soon, maybe over next 2-3 years, we will overtake Germany, Japan, and UK to become 3rd largest global economy. We are already the 4th largest automobile, the 3rd largest automobile, 4th largest automobile market after US, China, and Japan. Soon we will become 3rd largest automobile market. We were probably below 10 in mobile manufacturing. Today we are the 2nd largest mobile handset manufacturer in the world. We are already the 2nd largest power producer in the world behind China. Now, these are all the examples of how last 7 years of work has created growth opportunity, and how foundation has been laid for creating better growth in years to come. And your generation is lucky that you are going to inherit an accelerating growth economy compared to our generation. Now, As an individual, how do you take advantage of this? There are multiple ways of benefiting from an accelerated economy. One is to become an entrepreneur. There are so many IITians who have created great companies, not only in India, but also around the world. Even today, as I speak, so many IITians are joining startups, creating their startups, trying to solve problems not only of India, but also outside world. And this entrepreneurship, this startups, this businesses will create tremendous value. That will be direct exposure onto the growth of Indian economy. But every IITian, every individual cannot become entrepreneur. Many will be people like me who wants to do a job. Well, you can still participate in India growth story by becoming an investor. When I buy one share of Tata Motors, I become partner of Ratan Tata to that extent. When I buy one share of Infosys, I become partner of Infosys run by Nandan Nilekani. Investment gives you opportunity to participate in the growth story of India or growth story of a company. Now, my recommendation to all of you will be to save some money regularly and invest it wisely. That will give you your financial freedom. Many of our parents' generation were bank deposit investors. That really didn't give them financial freedom. But if they had invested in equity market, they certainly would have secured financial freedom. Investment looks complex, but it's very commonsensical. And let me give you an example to prove this. You might would have heard name of Peter Lynch. He was the legendary equity fund manager of a fund called Fidelity Magellan. In his times, Fidelity Magellan was the world's largest equity fund. Obviously, he had a team of young, talented professionals below him. And most fund managers by nature are egoistic people, very proud of themselves. It's important to bring them to ground. And Peter Lynch had a unique style of bringing his fund managers to the ground. One day he collected all of them and took them to a school and told these fund managers that you have to build a portfolio which will outperform portfolio built by the school kids. The fund managers, as I mentioned, are egoistic animals. They got furious and they said, please give us worthy competition. Give me a peer group whom I have to outperform. But these kids, at least be sensible. And Peter Lynch insisted this was a very serious exercise. And he wants his team of fund managers to build a portfolio which will outperform portfolio built by kids. The fund managers opened their laptop, started working on high risk, high return bets, hoping that it will outperform portfolio built by kids. Kids had no pressure. They build a portfolio at random. And after a year, kids' portfolio outperformed professionals' portfolio by a margin. Why did this happen? How can professional money manager lose out against the kids? Well, professional manager went for high risk, high return gamble because they were under pressure to outperform kids. Kids were in no competition at all. They picked up stocks of companies whose product they were using. They were familiar with Cadbury's, so they picked up Cadbury company. They were familiar with cola, so they picked up cola company. They were familiar with clothes and toys, they picked up clothes and toys company. And net, that portfolio outperformed professionals by a margin. Investment is all about common sense. Unfortunately, it's not so commonly available. As I mentioned, with the innocence of kids, you can outperform professionals. Investment is all about buying good companies run by good managers available at good prices. So simple to say, but so difficult to execute. What do you mean by good company? Any business which earns more than the cost of capital is a good business. If you are earning 8%, but you are borrowing at 12%, one day you will become bankrupt. If you are earning 12%, but paying 8%, you will continue to prosper. So focus on long-term return potential of a business over its cost of capital. The second thing is good managers. What do you mean by good managers? Well, there are some businessmen who often appear on page three and less in their business houses. You want to invest with a person who is working for you rather than who is enjoying with your money. So, all those people who appear on page three regularly, you need to be cautious. The second thing is about respect for partners. As I mentioned, by buying one share of Tata Motors, I become partner of Ratan Tata to that extent. Now, if Ratan Tata doesn't care about minority shareholders, then there's no point in investing with him. Fortunately, there are names like Tata's which take very good care of minority shareholders, and hence you end up always making money with Tata Group over a period of time. So, vision for business, execution for business, and concern for minority shareholders. That is the combo of good managers. And finally, it's good prices. In March, April, May 2020, prices were very good from an investment point of view. Upside was humongous, downside was very limited. But people were fearful because of COVID, and some smart people took advantage of that. They bought at those valuations when prices were very, very good. Many a times, like today, prices are fully priced, markets are fully priced in, prices are reasonably or expensive. Now, in such kind of scenario, you have to be cautious in picking up stocks unless until you are long-term investor. So effectively, buying good businesses run by good managers available at good prices end up creating a good investment decision. Please remember three things which is good enough for becoming a good investor. One, little drops of water make an ocean. Please invest small sums of money over a longer period of time to secure financial freedom. With small drops, you will be able to create an ocean. Number two, don't put all eggs in one basket. Today, equity has done well, so let me put all money in equity. Tomorrow, gold will do well, let me put all money in gold. Well, those kind of allocation doesn't work. You invest at all point of time something in debt, something in equity, something in commodity, something in real estate, something in offshore assets. That portfolio should outperform inflation. And that kind of diversified portfolio gives you stability, which gives you ability to enjoy return over a long period of time. So diversify rather than concentrate based on past performance. The third thing is all about asset allocation. It's about long-term investing. You don't get a delicious mango by planting a mango tree. You have to take care of mango tree for 12 years before delicious mango comes. This is the benefit of long-term investment. If you invest today expecting instant gratification, it's rarely going to materialize. But if you invest and give sufficient time, undoubtedly that will be a pleasant experience. So as an investor, be a long-term investor, be a regular investor, and be an asset allocator having diversified portfolio. This three combo, and then combo of buying good companies run by good business managers available at good price is more than what you need to participate in India growth story and secure financial freedom for yourself. Now, let me come to the final part of my speech, which is related to startups, fintechs, and so on and so forth. Today, technology is creating disruption, and many of my generation are like dinosaurs. If I have bought a new mobile, I need to go through manual to operate it. And I'll be probably operating it at 10, 15, 20% of capacity. But when the same mobile goes to my daughters, they are able to run it straight. This is the Gen Z generation, which doesn't have to read manual to operate electronic items. They are born with it. Today, as I mentioned, for idea, there is plenty of capital available. All of you can figure out a problem and find a solution and raise capital to execute that solution, and that will create huge wealth for yourself as well as for the society. Many of the existing businesses are made on legacy systems. They are run by old mindsets, and they are exactly like dinosaur, where if the tail is on a fire, it will take weeks before it reaches the signal to the brain. There will be many disruptors who will create havoc to dinosaurs, make them extinct, and capture the world. We have seen Zerodha kind of online brokerage company coming and disrupting existing retail broking. We have seen Baichu coming and disrupting existing education space. We have seen Policy Bazaar coming and disrupting existing insurance distribution. There are so many such examples where startups funded by external capital have solved problems of the society and in turn created convenience for the consumers and wealth for themselves. As I mentioned earlier, now you are all going to sit in a rising tide. Rising tide lifts all the boats. Your generation is lucky to be born or coming to work in an era which is going to witness accelerated growth thanks to all the reforms done in last 30 years. There is plenty of capital available for people who have idea, who have vision, who have execution capability. You could not have been asking for a better time than this to be an entrepreneur or to be an investor or to be both. I wish all of you all the very best. Be contributor to this India growth story. Be part of India growth story. Be an entrepreneur, be an investor, be whatever you like, but don't short India. Don't stay short on India. With this, I will end my talk, but happy to take your questions.
Uh, I would request all the participants to kindly put their questions in the Q&A box. Sir, here's the first question. Sir,
Yeah.
what is your view on the current bull run in the market and the astronomical valuations attached to various startups which have gone public in the last few months?
Uh, Revant, can you repeat your question? I just missed you.
Yes, sure, sir. So the question is, what is your view on the current bull run in the market and the astronomical valuations attached to various startups which have gone public in the last few months?
So essentially, the bull run of the market is reflection of optimism about future. Uh, if you would have bought, let's say, PVR Cinema when it got listed, it had 100 or 200 screens, and it was available at expensive valuation. And the film distribution business was dominated by old talkies or cinema halls. But the future was multiplexes. And someone who thought that PVR will go to 5,000 screens was willing to pay one price. And someone who thought that they only have 200 screens was willing to pay another price. At the end of the day, people who bet that PVR will grow manifolds benefited. So you have to take a call about the future. And market today is bullish about the future, and hence we have seen this bull run. Will market always remain bullish? Answer is no. Like there is low tide, high tide, same way in market there is teji and mandi, ups and downs. But if we deliver on the growth which I talked about, then this market is a screaming buy. If we don't deliver on the growth, then this market is a sell. We believe market is market, it will go up as well as down. But overall, Indian growth story makes it a very, very attractive place to invest into. You will see some losses, you will see some downturn, but if you stay invested, you will make money over a period of time. Now, next question comes: what about companies like Zomato, Nykaa, which trades at astronomical valuations. Well, it's again the same thing. People are betting upon growth. Today, let's say company X is serving 100 customers, but it is digital servicing. It doesn't require physical infrastructure. And their machines, which are today serving 100 customers, can tomorrow serve 10,000 customers or 1 lakh customers. People who believe they will go 100x, 200x, 1000x from current level are willing to pay the price. People who believe that they won't be able to create that kind of scale are sellers of that stocks. So it's a battle between buyers and sellers depending upon their optimism about the future. And I believe there will be many startups which will fail, which will not deliver return to investors, but few of them will do extremely well and they will benefit.
Okay, sir. So that I think answered the question. So, sir, the next question is, what is your view on the new tide of digital assets, such as bitcoins, NFTs, etc., which have become more valuable in recent times?
So, Revant, if you ask me, please help me value, let's say, IIT Gandhinagar building. I have a benchmark to value it. This took this much to construct. This is the value of land. Mota mota, this will be the price. If you ask me how to value, let's say, Sun Pharmaceuticals, I can do a DCF analysis. I'll be wrong, but I can construct a DCF analysis to give you a range of value. On cryptocurrencies, what do I value? I have to value that there will be a greater pull tomorrow to buy these things from me at a higher price, even though there is no underlying. How do I price that? So, to me, crypto is an odd asset class. There are people who believe that we need freedom from the government. We need freedom or protection against central bank easy monetary policy. And hence they are buying crypto. There are drug money and illicit money which are buying crypto because it allows them to transfer money from one location to another location without coming into the eyes of regulators. There are die-hard believers of crypto who are buying because they believe in the future. There are short-term traders who are buying because they believe in greater full theory that someone tomorrow will buy it at a higher price from me. There is a combination of all kinds of such thought processes which is making crypto what it is today. There are 9,000 plus cryptos. There are hundreds of cryptos which have gone up 50,000 percentage, 100,000 percentage overnight, and then crashed to zero in no time. My recommendation is that we don't know what crypto as an animal is. There is no underlying asset to value it. So take it as a high risk, high return gamble. Whatever money you can afford to lose, invest in crypto and take a call. If you are lucky, it might work out. Or this will be the greatest Ponzi in the history of human civilization. So take it as a high risk, high return gamble.
Okay, sir. So, sir, so I was just a little curious. So, do you also value companies quite traditionally by using discounted cash flow modeling? So you also value companies in the same way, right?
So, Revan, there is no one standard way to measure a company. Beauty is in the eye of beholders. So, there are multiple ways of valuing a company. One is based on growth potential, second is based on price to earning ratio, price to book ratio, price to free cash flow yield. The other is discounted cash flow mechanism. The other is again your optimism about the future. So there are multiple ways to evaluate a company. Don't get fixated with one. Try to understand why people are negative on a company. Try to understand why people are positive on a company. Anchor your positivity or projection about the company in some sort of quantitative analysis. Put all these things together to figure out whether this company should be part of your portfolio or not.
Okay, sir. Okay. Thank you, sir. So there is, next question is from Nitin Bhatt, and he again wants your view on the valuation methods portal companies such as IRCTC, Nykaa, Policy Bazaar, etc. Have received in recent times. So is the basis of he also wants to ask that is the basis of valuation changing between new age and the old legacy based businesses?
Undoubtedly, valuation is changing because in new age basis, you are able to expand market faster. You are able to reach out customers easily. Let's say if there was a bank which was only physical, it has to open branches, it has to hire people. Can its customer reach expand crazily? Answer is no. But moment you go digitally and you get one customer in, the word of mouth starts spreading. You'll be able to ramp up customer acquisition at much lower cost. So anyone who is investing in new age company is trying to figure out how many customers they can have in 1, 2, 3, 5, 7, 10 years. How much money they can make from that customer based on current scenario of their product basket, as well as future product which they may launch. And third, from those products, what kind of margin company can make. Nykaa today is selling, let's say, 200 customers. Can it be 10,000 customers after some time? Today they are selling beauty and fashion products to these customers. Could there be something more? Today they make X amount of money or X amount of loss selling to consumers. Could that become Y profit? On those assumptions, they kind of create a discounted cash flow. And that's where they give the value. Now, is that discounting good enough, bad enough? Well, it all depends upon what is their customer acquisition, what is their unit economy, and what kind of capital burn they have to suffer to create that unit economy and that customer acquisition. Now, many of the old companies don't get this benefit because their customer acquisition is not linear. In digital age business, customer acquisition can be linear, and hence you get this valuation.
Okay, sir. So, sir, the next question is from Shashwat Jain, and he wants to ask about he wants to know about your view on the estimates of GDP and on the estimates of GDP growth for India, and why are they highest in the world even after even after mismanagement of economic practices by the current government.
So, Sashwat, why do you think current government is mismanaging economy? Who gave you that view? I told you that we have become from 10th largest to 6th largest economy in 7 years. Now, if we were mismanaging and this kind of growth comes, then I will only pray for mismanagement, because management didn't push us higher. We were only going down. Now, we are a very large country and we are managed at central level, state level, local level. We have our limitations, and that's why Korea, Japan, China, Sri Lanka, Bangladesh has outperformed us. But the foundation for next 30 years growth has been laid. And we still have some work to complete on rule of law, respect for business. But if that happens, it is Sone pe Suhaga. So I remain bullish on India. I didn't go abroad for settling down when I had an opportunity, because I thought India is the best place to live in and I have no regrets. And I think India grows despite its governance system. Now, hopefully, governance will be supportive. And that's why you are lucky to be born in this era where you will witness much better accelerated growth than what we witnessed.
Okay, so sir, the next question is what is your view on the energy revolution that is going to come soon? And how can India and in general Indians capitalize on this?
So, what is our biggest bugbear? I mean, earlier when we were not having so much of FX reserves, oil price goes up, India goes down, oil price goes down, India goes up. That was the seesaw. Now, I mean, in 91, I told you that we had to pledge gold to borrow money. Why did that happen? Because Saddam Gulf War created oil prices higher and our back was broken. So energy is our real challenge. If you go to left of us in Middle East, everyone has oil. If you go to right of us from Myanmar to Malaysia, they have oil. Only we are the country without oil, or maybe God has given and we haven't found out. Then we have coal, plenty of coal, but that's polluting. We are hardly there in nuclear. We have lots of potential on hydro, but then the environmentalists come and don't allow those projects to be created. Today in Gujarat, you are seeing Narmada Dam's revolution. I come from a place called Surendranagar, Vadhavan, where in our childhood days, the tea was salty because water was laced with so much mineral. Today, thanks to Narmada Canal, you are getting and drinking a normal water and normal tea. But Sardar Sarovar Narmada Nigam, which was conceived before or around independence, got constructed only in this century. Now, this energy revolution is going to change that. We spend close to 75 to $100 billion a year for import of oil. Now, God forbid, if solar energy, hydro energy, nuclear energy, hydrogen, green hydrogen, and all those things materializes, and we don't have to import oil, $100 billion stays in India. You will be able to build so many IITs all over the country. You'll be able to build so many hospitals, schools, colleges that India can easily become a developed nation. So, energy revolution is something which we have to watch carefully, and we have to leverage local resources in a manner where our energy dependence continues to decline. Instead of giving 75 to $100 billion a year to Saudi and others for import of oil, we might as well use plenty of solar energy which God has given to us, hydro energy which God has given to us, or green hydrogen kind of newer technology, and create growth in India rather than giving money to other countries for import of oil. So energy revolution is extremely critical for India. I just hope and pray that green hydrogen and solar and other renewable energy succeeds. That way we replace coal, which is dirty energy, and we also reduce import of oil so that our money stays in our own country.
Uh, our next question is kind of a follow-up question of this question of our previous question. So this next question is from Keshav, and he wanted to ask about what sectors will benefit due to our reduced dependence on oil and due to the growth in electric vehicles.
See, if you plug the leakage in a, say, bucket, the entire bucket benefits. If Raven doesn't have to spend money, let's say your pocket money is 1,000 and you spend 200 rupee for fuel on your bike, and now suddenly your fuel becomes free for some miracle. Now that 200 rupee saving is for Raven, and where he spends, he will decide. Maybe he'll spend on clothes, maybe he'll spend on buying gifts for his girlfriend, or maybe he'll go and eat out. The savings of $100 billion in Indian economy will benefit in multifaceted way. We'll spend money on domestic consumption. That will benefit India as we create a virtuous cycle of more demand, more jobs, more income, more demand, more jobs, and so on and so forth. So our whole focus should be on plugging the leakage and then letting that income or letting that money kind of vibrate in the domestic economy. Now, whether people spend that fuel savings on eating out or traveling or studying or educating their kids more or whatever they spend, India will benefit.
Okay, sir. So now we will take the last question. So this last question is that compared to other Western countries such as USA, where up to 70% of the population kind of invest in some form of equity. But in India, a very small percentage of population are currently investing in stock market. So what can we do to make investing more popular?
Very brilliant question. And there are multiple things which we need to do. Today, if Raven wants to buy gold, he'll just walk into jeweler, give the money and buy the gold and come back. But if Raven wants to open a broking account, then he has to do KYC. If he wants to buy equity, then he has to open a broking account after doing KYC. He also has to open a demat account. Now, in my days, we had to sign at some 70 odd places to do KYC and open a broking and demat account. Now, try doing 70 signatures. In my career, most of the time I have worked in bank, and when I do 70 signatures, they many a times rejected my form saying that your signatures are not same. And I had to go back to same saying that how can you make 70 signatures which will be same? Now, this KYC norms are restricting people to come to financial market. Then there is lack of financial knowledge. There are many people who believe that equity market should only go up. But when it comes down, and it invariably comes down, people lose their faith and they move out. I am a Guchubai, as I mentioned earlier. A lot of my cousins are in Ahmedabad. So when there is a teji, they all become investor in stock market. In Mandi, they all lose out big time. And then they call my mother and say that, you know, your son is working or gambling. You please be careful about him. We have to give financial education to people so that they can withstand the volatility and downturn. The third is also governance standards. You know, when you invest with Tata's, Birla's, Ambani's, you know you are dealing with good people. But when you go and deal with XYZ, Polyplast or PQR infrastructure, are you dealing with good people? You have to ensure that crooks don't enter in capital market. They don't take people for a ride. So there are so many things we have to do in terms of ease of investments, education, governance, rule of law, respect for businesses, so that people participate in India growth story. The day my cousin brother tells that stock market investing is partnership with Tatas rather than gambling, there will be many more investors in India than in US in capital market. But we have to make that journey.
Okay, sir, absolutely, sir. Thank you, sir. I would again like to thank you for taking out your time to for organizing this webinar. And whenever you are in Ahmedabad Gandhinagar vicinity, I would like to invite you to our beautiful campus. It is in Palaj at IIT Gandhinagar. We would be delighted to host you.
Sure, Revan.
Uh,
Someday I'll reach there.
Yes, sir. Okay, sir. That's it from our side. And thank you very much. To all the participants, please follow Amalthya on Instagram. We would be organizing more of such webinars, and you can find all the updates there.
Bye.
That's it. Thank you.